Novo Nordisk, the company behind Ozempic and Wegovy. The stock's down nearly 50% this year. So, did we just witness the peak of the GLP-1 gold rush? Or is this the pullback that smart investors are dreaming about? Because here's what most people don't realize. Novo just reported double-digit sales and profit growth and still cut guidance again. They're warning of slower growth, tougher competition, and pricing pressure from insurers in the States. But here's what's really wild. The stock is trading at around $46 a share, and it was as high as $112 over the last year. That's not just a correction, that's kind of a collapse, wouldn't you say? Yet analysts still call it a moderate buy with as much as 52% upside. So who's right? The analysts who see the opportunity, or the market that's screaming danger? Well, here's what I don't hear anyone talking about. Novo International sales jumped 26% in the APAC. That's Japan, Korea, and Southeast Asia. If that growth holds, it could quietly offset all that US slowdown that's crushing the sentiment. And that's the signal that I'm watching, because when a company grows faster overseas than it shrinks at home, the story may not quite be over yet. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. And that's why in this video, I'm excited to show you exactly what I find what's behind Novo Nordisk's fall, what investors I think are missing, and whether I think the stock can rebound or keep sliding. Let's get into it. Novo Nordisk is a pharmaceutical company that was founded in 1923, and their headquarters are in Denmark. It's been around for over 100 years, which tells you that they know what they're doing when it comes to healthcare. But what does Novo Nordisk actually do? Well, they make medicines that help people deal with serious ongoing health problems, especially people with diabetes and obesity. Now, you've probably heard of their star products, right? Ozempic for diabetes and Wegovy for weight loss. And these 2 drugs didn't just make headlines. They redefined how investors think about the entire weight loss market. Ozempic and Wegovy are GLP-1 drugs. They help control appetite and blood sugar at the same time. And they help people feel full faster and manage their insulin levels. It's kind of a double win for weight and diabetes. Novo Nordisk sells these products to patients struggling with type 2 diabetes and obesity. And they also sell these products to healthcare systems, hospitals, insurance companies that cover the costs of all of these treatments. And here's a little history lesson for you. Novo was one of the pioneering companies to nail the GLP-1 drug class with their semaglutide treatments. Being first gave them a huge head start, and they grabbed a lot of that market share. Novo Nordisk even became Europe's most valuable pharmaceutical company at one point. But there's a twist. Being first doesn't guarantee staying first. Competitors are catching up fast, and that's where things start to get interesting. Now, let's talk about where the stock stands today, because I'm sure that's why you're here, right? The last time I covered Novo Nordisk, the stock was trading at $52. Today, it's trading at around $46 a share. Over the last 52 weeks, the stock has moved between a low of $45.05 and a high of $112.52. That just shows us how volatile the stock has been. And that kind of swing tells you one thing. Many investors have given up on the company, but hold on. Performance-wise, the stock is down 47% year-to-date and 57% over the last 52 weeks. And notably, the stock only has around 11% institutional ownerships. That means that most of its shares are owned by retail investors like you and me. That means that Novo Nordisk could potentially be more volatile since retail investors are quicker to react to news. And that's key. When retail investors lead the charge, price moves can happen fast and emotionally. So are retail traders overreacting to fear, or are they seeing something that the institutions missed? Well, the answer might be right in front of us. Now, before I dive into Novo Nordisk's latest quarterly financials, let's have a look at the previous quarter's guidance. Management guided for between 8 and 14% increase in sales and a 10% increase in operating income. Just to be clear, these numbers are at constant exchange rates. It means that Novo's removing the currency effects so investors can see the true business growth, not just the exchange rate noise. So that's for the forecast. Let's see if they met their guidance and look at their third quarter numbers. Novo Nordisk released its third quarter financials on November 5th before the market opened. Now, for the most recent quarter, sales increased 15% year over year to 229.92 billion Danish kroners. And if we convert that to dollars, it's 35.6 billion. That's no chump change, right? That's domination in a market that most companies can't even enter. So they hit guidance, and that's solid growth. But it just goes to show that people are still buying their products. Overall, sales in the States and international markets have increased 10% this quarter at a constant exchange rate. And that accounts for 51% of overall sales. Now, internationally, their biggest growth driver is coming from the APAC region, and this covers Japan, Korea, Oceania, and Southeast Asia. And sales in the APAC region grew 26% at a constant exchange rate, and that accounts for 20% of their overall sales. Then, operating profit grew 10%, hitting another target. As a result, net profit rose 4% to 75 or almost 76 billion kroner, or about $7.5 billion US dollars, with diluted earnings per share ending at just under 17 kroner, or around $1.68. Overall, revenue, operational profits, and earnings per share are all growing. But why did the stock fall after the announcement? It's something that we talk a lot about on my Discord. Well, here's the thing about investing, right? Strong financials don't always mean a strong price movement. Well, at least not up, right? Now, Novo Nordisk cut their revenue outlook for the whole year even further than last quarter. Sales growth is expected to come in between 8 and 11%. For reference, back in Q1, that was between 13 and 21%. And these guidance cuts are due to their sales being weaker than expected. Management is also anticipating increased competition, especially as its fellow pharma companies develop similar drugs. Sales in the States are also being impacted by pricing pressure from insurers and the healthcare providers for Ozempic and Wegovy. In other words, Novo's not really losing demand, they're just losing pricing power. But in pharma, that's a huge deal. So yes, Novo Nordisk is growing steadily, but they're growing more slowly than management initially expected. And this is why I see the stock having an overall downward trend. Remember, the stock market works on expectations. And if you, as a company, issue positive guidance for the year and then cut it down for 1 or 2 consecutive quarters, well, let's just say that the market is not going to react well to that surprise. Now, don't get me wrong. I don't see Novo's story as being broken. I mean, investor confidence definitely took a hit, and that's often what moves the stock, not just the earnings, right? So that's it for Novo Nordisk's Q3 financials. Of course, I'll cover the catalysts and their risks in future videos, so definitely be on the lookout for it, because the next few quarters may decide whether Novo's a comeback story or something worse. All right, so with all that out of the way, is Novo Nordisk stock a buy at these levels? Do we buy the dip? Well, consider that a consensus among analysts rate Novo a moderate buy with an average score of 3.71 out of 5. And over the last 3 months, the score has actually improved from 3.33. So analysts are growing slightly more optimistic about the stock. Then there's the high target price of $70, which suggests as much as 52% potential upside. So despite all the fear in the market, Wall Street's betting on a rebound, and that is worth paying attention to. But what do you think? Do you see the lower guidance as a speed bump or a sign of worse things to come? Let me know in the comments below. And while you're there, if you found the video helpful, don't forget to like and subscribe because it helps others find the video, it supports the channel, and it also lets you know when I'll be posting my next deep dives. Well, folks, that's it for me today. Thank you so much for watching, and I'll see you next time.